Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. A little bit different. Normally Fridays are earnings on the radar, but because we don't have anything scheduled until the beginning of January, there are no earnings on the radar. So um, today I just quickly would just do like a little bit of a reminder, just in the sense that hedges, right? Sometimes, or most of the time, it makes more sense to get into hedges when the premiums are lower, when the VIX is lower, when you don't necessarily need them. Because by the time you want hedges, by the time you want downside put protection, it can often be time. It can oftentimes be a little bit too late, or at the same time, it might be much more expensive because maybe it's because the market's rolling over, a headline hit, the VIX is popping for whatever reason, right? So um, right now, I mean, it just bulls are in complete control. I mean, just complete and utter lack of selling interest. We're just grinding higher. Right in the 8 EMA, we had like the one fast dip below the 20 at the end of November. Snap at the beginning of December, snap back, recovered, and we're just consistent higher highs, higher lows. And spiders, Q, same thing. The Dow, DIA, IWM, right? The Russell actually starting to break out, right? Look at that chart, starting to go now too. So just nonstop bid. Bulls are in control. The VIX, right, at 12 and a half. So just kind of like washed out levels, like kind of like the low from like the last couple of years, right? So everything looks good. Not to mention we're entering what typically is like a seasonally strong stretch, right? So like the Santa Claus rally everybody talks about, and that takes place technically from the day after Christmas through New Year's Day. So we're not quite into that window, but we're coming up to that window. And even last year, right, when everything was seemed to be falling apart at the end of December, we actually managed to put together a Santa Claus rally. So the bounce, it was a really ugly, if you remember correctly, it was a really ugly Christmas Eve, and then like the day after Christmas when the market opened, we had like a pretty significant bounce, and then that ended up marking the low. So even last year we had a little bit of a Santa Claus, or not a little bit. Even last year we had a Santa Claus rally, even to like the teeth of like that epic selling. So people expect another Santa Claus rally. That's fine. It may develop. It may not. But I just want to remind people that sometimes like these are the scenarios when everything looks so bullish, the action is so strong, stocks are ripping day after day after day. That these are the scenarios where it actually makes sense to pick up hedges, right? Because the VIX is low. That means like the cost of protection typically lower, right? The average trading ranges are lower. Again, that means that the cost of protection is lower, right? You're not paying like that surge in premium when we're in like 3, 4, 500 point days, right? Or when the spider is moving 3, 4, 5 points on a day. So right now, again, I mean things seem to be lining up for a continued grind, and that's great. Maybe it keeps playing out that way, but in the event that it doesn't, um, just kind of like a smart idea to think about looking at some hedges, right? Like I personally don't really like hedges like under like a month out. Two 2 months typically where I like to like open those hedges, and 3 months or even maybe 4 months. So just roll this SPY and the Q out through March, and just kind of looking at the premiums, looking at the setup, looking at what you're paying. It seemed that like it provided some sort of downside protection at least through the end of March. So that gives you just about like 3.5 months, right? 4 months from today. So definitely something to put onto your radar, something to think about. Not to like scare anybody because I think we do look really strong and everything's still kind of leaning towards like bullish action. But as we kind of get into the end of the year and as we get into January, which has historically seen some volatility, I just think it's like a smart idea. All right, so take a look. Spiders, Qs, Dow, Russell. I mean, if you're looking at like if you're long tech, you could look at the XLK, right? More tech focused. Or if you're long a lot of chips, you could look at the SMH, right? Those are more just semi focused or energy or healthcare, what have you, whatever. I'm just saying it's probably not a bad idea to start looking at some of these things when all things are lining up bullish, because the VIX is low, the average trading ranges are lower, and the cost of protection is also lower. All right. So if some of you are taking off this coming week for the holidays, I hope you have like a wonderful trip, great holiday season. Enjoy the time with your family and your friends. I'll be in. I'll be in. I'll be in Monday, but we're taking down like the trade ideas from 2 to 1, just so people can kind of not be overwhelmed when they got a lot of stuff going on this time of year. So gonna really just try to like keep things tight, focus on like a couple names here and there, and just kind of like hopefully ride the momentum until January and the news flow starts up again. All right. So I hope you have a wonderful weekend, and I will talk to you guys next week.